Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks slip as strong U.S. business data spurs bets on the Fed holding until at least December. Israel says it will expand its military operation against Hamas in Rafah as 1 million civilians move out of the city. Plus, as South Africa gears up for next week's election, we discuss investor appetite with Colin Coleman, a former Goldman Sachs partner, joining us in our Johannesburg studio. Well, happy Friday, everybody. TGIF. It has just gone 8 a.m. across the Emirates. I'm Joumanna Bercetche in Dubai. Let's get started with a quick check on how markets are doing. Well, risk-off sentiment is prevailing, namely on back of those stronger than expected PMI manufacturing numbers that came through yesterday. Also, more hawkish Fed speak coming out through the course of the week. We had Rafah Bostic yesterday, the Atlanta Fed president, suggesting that they may need to be patient before thinking about rate cuts. So this is where we're at. Looking ahead, we've got the Asia-Pacific market down about 0.8%, so building on from that negative momentum coming through in the U.S. markets yesterday. S&P futures looking to open up in the green, but of course, yesterday we did see that pullback. Two-year real yields trading at around 4.92%, about 1 basis point higher, though markets are pushing back the timing of the first rate cut. Now sits at around December of this year, around 35 basis points priced in for December. That was around 160 at the beginning of this year. And then Brent also slipping down to around $81.50. That is down about 7% in the last month and a 3-month low for the oil complex as we get closer and closer to that OPEC meeting. A quick check also at the one stock that everyone was focused on yesterday, that was NVIDIA. We did end this session up 9%. At one point, we were higher than 12%. You may recall yesterday, if you were watching the show, that options markets implied a 6% move. Well, we busted through that, broke through $1,000 to the upside. That gave a little bit of momentum to tech stocks, but by the end of the day, things had turned south. But let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, what are you watching out for this morning?
Well, it's all about those Fed expectations today, Joumanna, and I thought I'd roll out the heat map to show you the level of risk aversion in this part of the world. Declines across the board, the Nikkei and the Hang Seng going into the lunch break leading the losses, and the story is one of the resurgent dollar. That's really hitting the Korean won, sitting at the 1370 level, keeping a really close eye on dollar yen as well as it continues approaching the 157.52 level. Remember, this is the level which is thought to have drawn the first of 2 interventions from Japanese authorities earlier this month. Now, flip the board because that has some implications for bonds as well. And as you see there, the 10-year yield really jumping. I think this is a level we haven't seen since at least 2012. The bond traders are really bearish despite data today that showed CPI, inflation cooling for a second month. The core print is still at 2.2%. That is above the BOJ's 2% target. And there are also those that believe, given the weakness in the Japanese yen, we could really see the BOJ hike again. So really not that much appetite for bonds the further out the curve you go. Joumanna.
1%, a key psychological level there. Avril, thank you for bringing us the latest. Well, Israel says it will expand its military operation against Hamas in Rafah as 1 million civilians move out of the city. Bloomberg's Middle East economy and government editor Paul Wallace joins us now. Paul, earlier in the week, you and I were sitting around this desk talking about a story we published at Bloomberg. We had spoken to a U.S. official who told us that post-Jake Sullivan's trip around the region, it seems as though some of the U.S. concerns or reservations about a full-scale attack in Rafah had been diluted. Now we hear that Israel are indeed prepping for that ground offensive. What is the latest?
So I think that's right. They are prepping for this ground offensive. Israel first mentioned going to Rafah, I think it was back in January, and there was constant talk of it after that. They said from the beginning that they would let civilians in the city out first, and there were, give or take, 1.4 million of them there, more than half of Rafah, more than half of Gaza's overall population. The U.S. never said that it wouldn't accept any assault whatsoever on Rafah. It said it would only accept it if the civilians were allowed out first. There was huge skepticism, and to be honest, there still is huge skepticism that all of them can be got out safely. Israel is now saying 1 million of them are out. The UN, which last spoke about this about a week ago, said something like 850,000 civilians were out. So a lot of them have left already, but you're probably still talking about 200, 300, 400,000 civilians in the city, which makes any impending assault potentially very deadly if they don't get out.
Yeah.
And then you have the whole other question of the conditions that those people who have left Rafah are living in.
Well, we had Sam Dahed, our Saudi correspondent, also talking about the fact that tents are going for as much as $1,000. So it's not just people getting out of Rafah, but the conditions at which they've been forced to leave. But of course, the backdrop to all of this is these potential truce deal talks that have been going on. They were put on pause for a couple of weeks, and certainly that was the signaling from the Qatari PM when we spoke to him in the Qatar Economic Forum. But it seems as though something has happened yesterday, and that was the release of the footage of these female Israeli soldiers being abducted by Hamas. The families of those hostages released those videos. Very shocking, and it seems to have moved public sentiment once more in Israel, pushing the government to once more re-enter into those discussions. So is there hope now that maybe something can come out of it in this second attempt?
I think there is. The problem with these talks is that since the one and only truce ended on the 1st of December, that was a week-long truce where roughly half the 250 hostages taken on October the 7th were released. There've been constant talk of a deal being close, and we've never got there. In the last sort of 2-3 weeks, with the Israeli forces trying to move civilians out of Rafah and an assault looking likely, the talks seemed all but dead. And as you mentioned, the Qatari Prime Minister, who's one of the key mediators between Israel and Hamas, all but said that they were going nowhere and they were totally stalled. It does seem like they're potentially now back on again, and there are reports and speculation that the head of Mossad and the head of the CIA are going to meet up soon, possibly with Qatari and Egyptian mediators. But I think we still need to point out that the big problem, or I think perhaps the biggest problem, and has been for a long time between Hamas and Israel, is that Israel says any truce must be just that, temporary, and that the war must continue afterwards until Hamas is defeated and or it surrenders. Hamas wants to make any truce effectively permanent, and that's something Israel says it won't accept.
There's still a lot of daylight between the two sides, but at least Israel are showing signs that they want to get back to the discussions again. Paul, thank you for the latest. We'll keep an eye on what happens this weekend. Bloomberg's Middle East economy and government editor, Paul Wallace. Well, a two-speed global economy is overshadowing this week's G7 finance ministers meeting in Italy. Officials are confronting the prospect of a less synchronized monetary policy amid a resilient U.S. economy and Europe's slowing growth. Our news desk editor, Jill Disses, joins us for more. Jill, just give us an overview. What should we be watching going into the G7 this weekend? We talk about the disparity and various speeds of the global economy, but what is going to be on the agenda for these finance ministers?
Well, Joumanna, you mentioned at the top of this program that we've heard a lot of really hawkish speak out of Fed officials this week, Rafah Bostic, this general narrative that the U.S. is going to have to keep rates higher for longer. I think that's clearly playing into this narrative about the two-speed economy and is playing into these discussions that finance officials are having in Italy right now. Obviously, all of these discussions are happening just a few weeks out from when the leaders of the G7 are ultimately expected to meet in just a few weeks' time. But look, I mean, it is true that we've got this sort of disparity between what we're seeing in the U.S. with this incredibly resilient economy, these discussions about how we might not see interest rate cuts until later this year, versus what we're seeing elsewhere in the global economy, including in Europe, where the ECB may actually cut interest rates, sort of leading the G7 for the first time in just a couple of weeks. And so I think that's really high on the agenda for a lot of these leaders, these finance ministers right now, as we kind of push into what exactly things are going to look like going forward.
And I was reading overnight that the U.S. Treasury Secretary Yellen is actually planning a meeting with the ECB President Christine Lagarde. So that's one thing to watch out for. But another report that I was reading was suggesting that the Ukrainian President Zelensky may actually make an appearance. We don't know if it's in person or video at this G7. So you've got to think that funding for Ukraine is also going to be high on the agenda, isn't it?
Yes, that I think is probably more likely for, obviously the leaders summit once they actually meet in a couple of weeks. So we've heard people familiar are telling us that Zelensky is planning to attend in some capacity. His office hasn't said his schedule isn't finalized yet. That's obviously a pretty significant deal here. It would actually be the second year in a row that Zelensky would attend a G7 leaders conference. And yes, it's really critical, I think, at this point in Russia's war with Ukraine, in Ukraine right now, that Zelensky try to secure additional funding. We know from the U.S. side that the U.S. has just recently approved $61 billion aid package, but whether that's ultimately the last tranche that we see, well, that we'll have to see how that ultimately develops. Meanwhile, it looks like there's some discussion about other sources of funding that they could potentially peg to help Ukraine in these war efforts. So that does seem to be shaping up as a pretty predominant matter of discussion over the next couple of weeks.
Yeah, it definitely appears to be the case. Jill, thank you so much for joining us this morning. Our news desk editor, Jill Dissas. Now, Chinese Premier Li Chang heads to Seoul this weekend for a summit with the leaders of Japan and South Korea, their first trilateral talks in about 5 years. For more, we're joined by our China correspondent, Minmin Lau. And Minmin, it is pretty significant that the leaders of these three countries are meeting up. Indeed, it is the first time they're meeting up in 4 years, I believe. How significant is it?
Yeah, it is very significant because those talks have been halted for a while, partly because of the pandemic, but also partly because resistance from all sides to meet, given, souring relations over the past 4 years with Korea and Japan inching closer towards the U.S. And chips is going to be a big part of those talks because we know Washington has been courting Korea and Japan to increase limitations on those chip-making equipment exports to China at a time when China already faces this wall of restrictions from the U.S., from the Dutch, from the Japanese as well. So the U.S. is really picking off the suppliers one by one of China. And this is a time also when Korea is the largest provider of chips to China. Japan as well, the largest provider of silicon wafers to China. So a lot at stake here. Premier Li likely to use this trip to really shore up its supply chain security, and also big stakes for Korea and Japan as well, because they have these big companies, Samsung, SK Hynix, that have huge presence in China. They will be worried about retaliation from China as well.
And let me just ask you, to what extent do you think military issues are going to dominate the agenda here, also keeping a close eye on the military exercises that China are conducting in Taiwan, also North Korea in the picture? Tell us more about how the military complex is going to feature in these discussions as well.
That's definitely going to be a big part of the talks as well. This is coming at a time when, again, Korea, Japan, and the U.S., they are strengthening their defense mechanism. They have been holding joint drills in the East China Sea. That's where China has a disputed territorial claim with Japan over the Senkaku or Diaoyu Islands. These two countries, they have different names for those islands. And then Taiwan, as you said, Japan just sent its largest ever delegation to attend that inauguration ceremony of President Lai Ching-te on Monday. So Beijing, understandably, very upset by this. We see those military drills over Taiwan yesterday. And then there's North Korea, which is the perennial, enemy of South Korea with its nuclear missile program. And now there is allegations of this weapons for aid exchange with Moscow as well that is aiding the war in Ukraine. Of course, Pyongyang and Moscow have both denied this. But Korea and Japan, they're going to use this opportunity to, again, push Beijing to leverage its ties with Kim Jong-un to really get him to rein in North Korea's aggression in the region.
Yeah, it seems like a lot of things are at stake at this trilateral summit that's taking place. Thank you, Minmin Lo, our China correspondent. Well, still ahead, we will get the global outlook with the chief economist of LBBW as traders recalibrate the timing of the Fed rate cuts. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Asian stocks tracking Wall Street lower as investors recalibrate rate cuts by the Fed once more. Atlanta Fed President Rafah reiterating the course from officials this week that the central bank needs to be patient on its next move. Let's bring in Moritz Kraemer, Chief Economist at LBBW. Moritz, good morning to you. Wonderful to see you. The backdrop to all of this Fed speak is obviously the inflation outlook. And I think, what's spurring this more hawkish commentary that we've got in the last couple of days is the fact that inflation in the U.S., at least as far as core inflation is concerned, seems to be moving sideways. So how does that affect the calculus of where, the Fed is going to go with their rate cutting cycle?
Yeah, good morning, Joumanna. Indeed, the inflation rate is stuck, and it's been stuck since almost like a third quarter of last year. If we look at the year-on-year inflation rate, but what surely worries the Fed as well, if you don't look at the year-on-year change, but just take the last 3 months, for example, which have all been sort of the readings above expectations. If you just take those last observations and then annualize them, actually you see that inflation is not going sideways, but it's going up. And that is certainly the wrong direction, and they're rightly worried. And I think the chorus of Fed officials saying, we're going to wait, I think has been loud and clear, and the markets have been brutally reassessing their interest rate cut expectations so far this year. And I fully concur. I would be somewhat careful about those speculations that the Fed could hike rates as the next step. I think that is still pretty unlikely. I think they're at a good level, but we'll be there for a while.
Yeah, well, that was going to be my next question, but you anticipated it. I think Powell was pretty clear. He pushed back against the prospect of rate hikes at the last meeting. Why do you think markets are shrugging off what's being priced into the Fed and priced out? I mean, S&P is just very close to all-time highs. Why is it not relevant to stock market direction?
Well, I think it is relevant, but as you rightly point out, the markets are largely ignoring. I sometimes wonder whether the people trading bonds are ever talking to the people trading stocks in the same house. But so just think about it. At the end of last year, traders were anticipating 6, maybe 7 cuts during this year, and now we're talking about maybe 1 to 2 cuts. Nevertheless, the stock market has gone up, up, and up. So I think there is really a disconnect, and I would expect that we will see some correction in those valuations, which are very, very lofty by historical standards. AI, yes or no, but I think it's very, very pricey.
Yeah. Moritz, let me ask you about Europe. I thought it was interesting to note that the European Commission recently just revised down their outlook for where inflation is heading. It feels as though the inflation dynamic for Europe is different to that in the U.S. and that the disinflationary process there is actually intact. So how does that affect what the ECB are going to do? And are you in the camp that the ECB will end up cutting rates this June?
Yes, definitely. I mean, I've been holding this view for a long time. The disinflation process is much further advanced, and the talks that you sometimes heard that the Fed will always have to move first. I mean, why? I mean, we are not having a sort of a pegged exchange rate or anything like that. So we're looking at a different situation in Europe. Disinflation is further advanced. It's more solid. But there's also a weaker economy, so the risk of unit labor costs rising as much as they have in the United States is more subdued. So yes, rate cut on June 6th, but then ECB officials have been pretty clear that they're going to wait after that. So I expect 1 cut each quarter, meaning we're going 75 basis points by the end of this year.
Yeah, so what does that do to the euro? If the ECB cut rates and the Fed keep rates on hold for longer, I'm guessing that means more downward pressure on the currency.
Yes, absolutely. I mean, the interest rate differential will rise. We know that this is the main driver of exchange rate movements. And so far, the euro has held up remarkably well against the dollar while all this repricing has occurred. But I would think that the euro would weaken as a consequence of this widening interest rate differential between the dollar and the euro. And I'm actually seeing an exchange rate close to parity towards the middle of next year.
Okay, well, that's a bold call. Let me just ask you another question, because I feel like we spend a lot of time talking about the state of U.S. public finances, but perhaps not enough time talking about the state of some of those European member nations. Italy is always the one that comes to mind, but France is interesting because they also run a very big deficit last year. There's an S&P review coming up for the country's rating. How worried should investors be about the trajectory of some of these Eurozone member states' public finances?
Well, they clearly are not worried. If we look at the spreads between Italian and German government bonds, for example, which is generally used as a benchmark for risk on-off in the government bond market in Europe, it's very, very narrow currently. So France, yes, the S&P opinion will come out tonight. They have France on a negative outlook. I would think that a downgrade is quite possible, but we must not forget that the rating agencies have been very, very mild with the developed economies for the last couple of years. There haven't been any lowering of ratings, but we need to accept that we're sort of starting to run out of excuses why the deficits are out of control. You know, before we had the pandemic, then we had the gas price crisis, and we had the war and so on. But now we're in a new normal, and France has placed a deficit of over 5% last year of GDP. That's not sustainable. Something's going to happen. And if consolidation occurs, then that would put another dampener on economic dynamism in the euro area. So there's a very important release tonight by S&P. I would, if I have to bet, I would think they're not going to move.
Okay, well, it's something that we should be watching anyway. Thank you for flagging it to us. Moritz Kraemer, Chief Economist at LBBW. Now, also coming up, more banks are cracking down on work from home. More on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Now for a look at some other stories that we're following this morning. It has been a bumper year for Nomura's execs, with Japan's largest brokerage paying more than double for its top managers. Total compensation paid to the firm's 8 executive officers rose 150% in the year ending March 31st to $28.4 million. Nomura's net income rose 79% last year, marking the first increase in annual profit since the CEO, Kentaro Okuda, took over in 2020. And more Wall Street banks are ordering staff to report to company offices 5 days a week as regulators return to pre-pandemic monitoring standards. More than 8,000 bankers at Citigroup and HSBC in New York have been told their hybrid arrangements are no longer viable. While Barclays will require thousands of investment banking staff globally to spend 5 days a week in the office or traveling to clients from June the 1st. Coming up, as South Africa gears up for a pivotal election, we discuss investor sentiment next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks slip as strong U.S. business data spurs bets on the Fed holding until at least December. Israel says it will expand its military operation against Hamas in Rafah as 1 million civilians move out of the city. Plus, as South Africa gears up for next week's election, we discuss investor appetite with Colin Coleman, a former Goldman Sachs partner, joining us in our Johannesburg studio. Oh, good morning again. It's just gone 8:30 a.m. across the Emirates. I'm Joumanna Bercetche in Dubai, checking in on how markets are faring because we did not get a pretty close for Wall Street yesterday. As we were speaking about earlier on the show, more hawkish commentary coming through from the Fed, the likes of Rafah Bostic, saying they have to be patient before thinking about rate cuts. Also stronger than expected PMI manufacturing numbers, pushing back the timing of that first rate cut. It's now sitting at around December of this year. Remember, earlier in the year, we had about 160 basis points priced in. Now it's only around 35 basis points. So that negative sentiment has continued on to the Asian session. Asia Pacific trading down 0.8%. S&P futures, however, picking up a bit of momentum as we head into the European session. We've got 2-year yield sitting at 4.92%. And then Brent also can't really get a bid these days. futures. The Brent complex is sitting at around $81, down 7% in the last month. But of course, the major stock we were focused on yesterday is NVIDIA. We did see quite a strong price action yesterday. The stock ended up 9% higher. At one point, it was 12% higher, but you can see piercing through $1,000 to the upside and bringing in a lot of momentum to those AI-exposed stocks in the U.S. Now, let's check in on how markets in Asia are faring as well. Avril is in our Singapore studio. Avril.
Yeah, Joumanna, it's really about those dialed-back expectations of Fed rate cuts that's prompting risk aversion in the Asia-Pacific. Stocks, currencies are down. A gauge of equities in the region are headed for its first weekly loss in 5 weeks. And the drags today are those Asian chip stocks, despite yesterday fueled by NVIDIA earnings. For Samsung, an added concern after Reuters reports that its high-bandwidth memory chips failed an NVIDIA test due to heat issues. Now, let's flip the board because I also wanted to focus on dollar yen as it continues approaching the 157.52 level, which is what is thought to have last drawn intervention. But the picture since early May has shifted a little as we've heard how the U.S. Treasury Secretary Janet Yellen has voiced discomfort about government intervention in currency markets. So something this might make it more difficult for Japanese authorities to intervene. Still, we're seeing dollar yen sitting above the 157 level. Joumanna.
Talking about assets not being able to get a bid, the yen is a good example of that. Avril, thank you so much for bringing us the latest commentary from Singapore. Now, South Africa's financial markets are brimming with optimism as voters get ready to cast their ballots next week. Bloomberg's latest survey of emerging market investors found they believe the rally has room to run after the elections. That's interesting. Let's bring in my co-anchor, Jennifer Zabazaja, who is in Johannesburg. Jen, we talk about some of the positive momentum building into South African assets into the election. What do you think positioning is like now?
Joumanna, it's been really interesting because about a year ago, there was a lot of concern heading into this election. But this latest Bloomberg survey that we took of investors locally showing that they're largely overweight or neutral, really, in this economy. And as you were mentioning, they believe a lot of local assets have room to run. So we've been seeing the Rand. We've seen local stocks and bonds also doing really well. The Johannesburg Stock Exchange, which is our main benchmark here, doing exceptionally well, more than what we've seen in the past few weeks, albeit that was before we got the Fed minutes yesterday. But I think a lot of this is largely due to the fact that many people are anticipating the ruling ANC to still maintain its majority and potentially form a coalition with some of the more market-friendly, business-friendly parties, in particular the IFP. And so, yeah, we're seeing investors definitely more optimistic heading into the election next week.
Jennifer, let me just ask you, what outcome investors think will be the most favorable? Because as you say, ANC perhaps may be able to get an absolute majority, but if they don't, they will be in a position where they'll have to cobble together a coalition. In which of those circumstances would the market react more positively, do you think?
Well, the concern really, Joumanna, was the ANC having to partner up with some of the less market-friendly parties. And I'm talking about the left-leaning EFF and also some of the other populist parties. But as I was mentioning, the IFP potentially could be a positive coalition partner. And a lot of investors are saying that a lot of these more negative partnerships, coalitions, are potentially tail risks at this point in time. And listen, it's still, we still have to see really how this shakes out in terms of how the ANC, how turnout is for the ANC. But even if they do still get a majority in parliament, potentially they will have to team up with the main opposition party, which is the Democratic Alliance. And investors are seeing that potentially as more positive, Joumanna. But let's dig into this more with Colin Coleman. He is an adjunct professor at Columbia Business School and also a former Goldman Sachs partner, someone very perfect to talk about this. Colin, so we were just digging into some scenarios that investors are anticipating. I wonder if you think about the upsides and the downsides in terms of the best outcome for this election, what would you say?
Look, I don't think this is going to be the seismic election that some people think it's going to be. In other words, I don't see a major pivot in South African policy as a consequence of this election. It may well be that 2029 turns out to be that election. This election, I think, will likely see the ANC, the ruling party, and its president, Cyril Ramaphosa, re-elected and form the new administration. And that will be either as a majority, as a straight majority, or as a narrow minority, but in the 45 to 50% range. And that will provide it with the ability to cobble together a simple coalition with another party like the IFP, as you suggest. The real issue for South Africa and for the market is that we've had a decade now of below 1% growth rates, in fact 0.8% growth rates. And South Africa internationally is now seen as a bond market, effectively a bond market dream and an equity market headache for international dollar investors, because the returns on the JSE reflect the fact that we have a low growth trap in South Africa, and on a dollarized basis, the returns on the JSE have not been competitive. So the investors are anxious that they should retain on a probability risk-weighted basis a bond market that provides these high-yielding returns, yet low risk, because the fiscal and monetary policy in South Africa has been quite conservative.
But do you think, I mean, the survey that we just recently conducted says that a lot of investors are a little bit more optimistic in terms of some of the fiscal reforms that we've seen as of recent. Do you think they go far enough, though, to give investors confidence, and especially international investors, to come back into this market?
I heard you say your survey was a domestic investor survey, and I think that does reflect domestic views. But international views, as I say, South Africa is really seen as a bond market, not an equity market. It's highly liquid. It's very tradable. The currency moves along with the shocks that absorbed both globally and domestically. So it's an attractive market for international large institutional investors to play. But it, over the last period, due to low growth, has not been very attractive as an equity market. So the question really is going to be, assuming that I'm correct, that there is a re-election of President Ramaphosa as the president and he forms a new government, will he do anything differently in his second administration to drive an economic growth plan that, with implementation, is going to be breakout for the government? And that is going to be seen in who does he form the new cabinet with? Does it reflect a different intention to grow the economy?
Yeah. Colin, Joumanna over here, maybe a big picture question that ties into what you were just saying now, vis-a-vis what the next government would do and what their policy priorities are. When I think about the South African economy, there are two things that I think of almost instantaneously. One is the electricity issues that have been plaguing the country for years now, load shedding, and of course they decrease the amount of that's happening in the run-up into the election, but it's still a big issue in the South African economy. And then the second thing is just the wealth income distribution issue. There's so much inequality in a country like South Africa. What is going to change post these elections? If Ramaphosa does get elected again, if he is president again, how should the priorities change?
Great question, Joumanna. I would say he needs to ask the question in a single-minded way: how do we get out of the low growth trap of 1% and unemployment rates of, on a broad basis, including those who've given up looking for work, 42%. And to do that, he has to go way beyond just fixing the basics, electricity, energy, and logistics problems and crime problems. He needs to have a fiscal plan, which is a breakout plan, to get 4 to 5% growth rates in South Africa. To do that, he needs the best brains around his cabinet table. He needs to make sure that there is a decisive break with a fiscal impulse that has been non-stimulatory. We're going to need to see a fiscal plan that matches excellent monetary policy that we've seen from the South African Reserve Bank, and he needs to have that level of professionalism and excellence on his fiscal team.
And can I just ask you the perennial question about Eskom? What is the solution? How are things going to get shaken up at Eskom?
Well, Eskom, they've made progress on the management and the governance of Eskom now, but there's underlying corruption problems in all of these state-owned enterprises, so they need to dig deep, they need to prosecute wrong behavior, and they need to get far greater private sector participation. That means the regulatory regime, including the licensing and the investment in transmission, needs to match the calls that they are making for private sector participation to make it possible for that to be fast-tracked.
Colin, we also wanted to talk to you. I mean, what's been interesting is also how this Anglo-American, also BHP deal has been the timeliness of it, especially in relation to the election. I wonder what you think that says about South African assets in particular and how this deal and these negotiations have played out. Do you think this is potentially leverage for South African authorities and also for local assets?
Let me just say, I don't think the BHP bid for Anglo has anything to do with their attraction to the South African assets of Anglo-American. It's really about the copper assets of Anglo-American offshore, excluding South Africa. But insofar as their ability to implement and execute on the deal, BHP or Anglo-American on a standalone basis have a lot of wood to chop with the regulatory authorities in South Africa. They have to deal with the South African Reserve Bank conditions, which gave permission for Anglo to list in London, and they have to deal with the competition filings that will inevitably ensue, independent of whether BHP takes over Anglo-American or Anglo-American executes on its restructuring strategy. And that's not so much from a competition point of view, but from the public interest aspect of competition law in South Africa. So there are some complicated issues. I would just say, to the extent that Anglo and BHP can move towards a friendly deal, that will smooth significantly the path for BHP and Anglo to getting a deal done and through the regulatory authorities. Is your
expectation that that will happen?
Well, certainly the fact that they are now talking for the first time and have a week at least, unless there's a further extension, is a positive indication that they intend to do a deal.
Okay, we'll be paying close attention to that. We have to leave it there. Colin Coleman, Columbia Business School adjunct professor and also former Goldman Sachs partner. Thanks so much, Colin, for coming in early for us. Joumanna?
Brilliant. Thank you, Jen. That was Jennifer Zawazaja, my co-anchor in Johannesburg. And also coming up on our show, President Ibrahim Raisi's unexpected death is raising questions around Iran's economy and succession plans. That conversation next. This is Horizons Middle East and Africa.
India decides. As the votes come in, can Prime Minister Modi win a third term? And what direction will India take next? With a focus on the economy, social divisions, and climate change actions that will influence the global story. Bloomberg's Haslinda Amin is live in Delhi, bringing you the latest updates as election results from the world's largest democracy are revealed. Coverage starts June 3rd on Bloomberg Television. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Now, the unexpected death of Iran's President Ibrahim Raisi could lead to changes in the Islamic Republic's economic strategy. For more on this, Bloomberg's chief emerging markets economist Ziad Dawood joins us. Well, earlier in the week, we were discussing the political ramifications of President Raisi's death with our colleagues on the BN side, and they were saying, well, ultimately, it isn't going to change things too much because the power still lies with the supreme leader, with the Ayatollah. I just wonder from an economic standpoint whether we can expect any changes to the Iranian economy. The backdrop, of course, is that they're still under U.S. sanctions. Inflation is still very high in the country.
We don't expect significant changes in the Iranian economy. As you've mentioned, the president is an important role, but it's not the most important one in Iran. There's a supreme leader, which is the most important one. And also you have different military groups that play a significant role in setting the strategy for Iran externally, but also they have an increasing economic influence within the Iranian economy. So don't expect significant changes there. And externally, if you look at the region, what's happening with respect to the war, again, nothing is expected in terms of changes. If you look at oil prices today, it's lower than a week ago before the Iranian president died. And also, if you look at the geopolitical risk premium in oil prices, they're near zero now.
Yeah, which is really remarkable. I saw that in your commentary. You estimate the geopolitical risk premium in oil to be near zero. That was down from $12 per barrel in October. It just speaks to the fact that, oil investors are not so much concerned about everything that's happening in the region and its potential impact on production.
Well, I suppose we've also had more than 7 months of the conflict in the region, and we've learned something about how the different actors are reacting in this conflict. Back in October, uncertainty was much higher, and this is why the risk premium was around $12 per barrel. In April, when Iran and Israel were exchanging direct but calibrated attacks on each other, risk premium was slightly positive, around $2, but obviously much lower than October. And today it's near zero, and the death of the Iranian president has not changed that or moved that in any significant way.
I also think it's pretty interesting that Iran oil production has actually been moving up. I think many people would be surprised to hear that.
I was actually surprised by that because, yes, there was a sort of an implicit Iran-US deal last year that allowed Iran to increase its oil production. But I would have thought that after October and the beginning of the war in the Middle East, that there will be tightening of enforcement of sanctions on Iran. That hasn't happened. Production today is similar to the October level. And I guess probably the U.S. elections and the impact on the global markets.
You said it, not me. The U.S., there's an election coming up, so maybe you turn a blind eye to the amount of oil that Iran are producing. I do want to ask you about Egypt. I know you spent a lot of time looking at the country and what's happened, but, big events for Egypt in the last couple of months, namely spurred by, the international help that's come through from the IMF, from the UAE. How has that turned Egypt's fortunes around?
A complete game changer, absolute game changer. Yes, the currency did move by about 40% in March, but it has been relatively stable since. And there's been plenty of pledges, the UAE $35 billion, the IMF $8 billion, the World Bank, the EU, the UK, and so on. In total, more than $57 billion. That has helped ease Egypt's dollar shortages and actually started seeing them in the numbers. If you look at the net foreign assets of the banking system in Egypt, between January and March, that has improved by $25 billion. So we're not just talking about pledges and words. Money has actually flowed into the country. If you look at the foreign exchange reserves at the central bank, that has improved again by $6 billion over the last few months. And if you look at what markets are expecting in terms of the currency, yes, they expect a bit of weakness in the pound, but not as significant as they were thinking in January and February. So the international support was definitely a game changer.
Okay, so this tailwind has come through for Egypt, but what do you think the biggest challenges are still going to be over the next year or two?
I think so. We have to take a step back. Why did Egypt get into its latest crisis? There's an element of bad luck in terms of wars, in terms of the lifting of global interest rates, but there were also policy mistakes in the sense of reliance on hot money, which can come in very quickly but can leave very quickly, in the sense of having a not very flexible exchange rate, which doesn't react to what is happening in the economy. Building infrastructure doesn't yield economic return, and the important role of the army in the economy, which puts off domestic and external investors. So I think these are the key questions that Egypt has to answer. Money helps ease dollar shortages in Egypt, but doesn't cure the structural issues which Egypt has to address itself.
Yeah, but at least they've bought themselves some time, and that's often key to being able to enable some of these structural reforms that are important in the case of Egypt. Ziad, thank you so much for the overview. That was Bloomberg's chief emerging markets economist, Ziad Dawood, joining us around the set, talking about Iran and Egypt. Now for a look at some of the other stories we're following this morning. Goldman Sachs has become the first Wall Street bank to be licensed to set up a regional headquarters in Saudi Arabia. Under rules which came into force this year, banks face business with the kingdom unless they have a regional base there with at least 15 employees, including executives overseeing other regions. It is not immediately clear how Goldman will structure a regional office there. Coming up, we talk Elon Musk's money as SpaceX starts talks to sell existing shares. More on that story coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Now for a look at some other stories we're following. Bloomberg sources say SpaceX has initiated discussions about selling existing shares at a price that could value the closely held company at roughly $200 billion. We're told it could unveil a tender offer in June with shares priced at around $110. Elon Musk says SpaceX has no need for additional capital and will buy back shares. Boeing also in the headlines this morning once more. Boeing shares slipping after it scrapped a plan to generate cash again this year and warned of another significant outflow in the quarter. Boeing says cash burn will be similar or worse than the prior period when it ran through almost $4 billion. Boeing's delivery woes have been compounded by China's request for additional certification on some aircraft parts.
The CAAC has asked for additional validation on a lithium battery in that recorder. And because of that, we have not been delivering airplanes to China recently.
And before we let you go, just a quick look at how some of these senior financial assets, main financial assets are trading into the European Open. A bit of a risk-off sentiment building up in Asia. Asia-Pacific down 0.75%. S&P futures leaning higher, but of course we had a negative close yesterday as investors start to dial back their expectations of the timing of that first rate cut. But that is it for our show today and this week. This is Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Stay with us for Daybreak Europe. That's coming next. This is Bloomberg.